Alright, y'all, I want to make a video about leverage. I'm going to call this the truth about leverage because there's a lot of people out there who are basically demonizing leverage, saying if you use leverage, it's very irresponsible and you will lose all your money, and that exchanges only allow you to use leverage because they know that you're going to get liquidated and lose all your money. And I would like to, I guess, make a case for the benefits of using leverage. And I personally trade with relatively high leverage. And it's actually a tool that keeps me from losing money. Now, I know that's a loaded statement, and so I'm going to try and unpack this as much as possible. Make sure to like the video. Make sure to subscribe to the channel. Again, if you are new to trading, I do not recommend using high leverage. Okay, using high leverage, first and foremost, let me get this out of the way. Using high leverage is meant for experienced traders who understand how to trade. For example, I took a long trade from this level. I was waiting for this exact level. I gave the setup in advance in my VIP Discord for the exact level of around $20,700 to just dip below that level and then long it on the reclaim. Literally, we came down to the level that I was looking for, 27.7. We dipped below it, and then on the reclaim, we had a massive bounce. When you understand technical analysis and you understand how to catch these trades, you can use higher leverage. Another example is the short trade that I took over the weekend from this wick right here. I literally shorted from this wick. And if, again, you are able to enter trades like this with extreme precision, you can use higher leverage. Okay? It allows you to risk a very small amount of money to make gains on a larger amount of money. And I'm going to get into that more. But if you are new to trading and you're not trading with precise levels like this, with extremely precise technical analysis, then I do not recommend using leverage because you probably will get liquidated, and we're going to get into that more. Now, if you do want to learn how to trade this way and find the levels, I do have a course. If you're interested, there's a 25% discount, jasoncaspertrading.com. This is changing the way thousands of people approach the markets, how to stop trading with emotion and actually trade with real technical analysis. Also, if you do want to join the community where I post the juicy trade setups in advance, as well, guys, as we have a thriving community of traders posting trade setups, posting key levels in advance, you can go to patreon.com/JasonCasper. So let's quickly get into a little bit what exactly is leverage and how is it advantageous to us. When we were talking about margin trading, what is the difference between spot trading and margin trading? Spot trading means you're actually owning the physical asset. If I am spot trading Bitcoin, that means I'm buying real Bitcoin cheap, and then I'm selling it when it's more expensive in order to make a profit. If I am margin trading, I am not actually owning the asset. I'm betting. It's like a sports bet, okay? When I'm short, and right here I have two open trades. I have a short trade open right here, and I have a long trade open right here. I'm betting that the price is going to go a certain direction. Now, if I'm betting with my friend on a certain sports game, sports ball, okay, he's rooting for, the brown team, and I'm rooting for the red team, and we both have $100. We put our $100 on the table, and if my team wins, I get $200, and if he loses his $100, and I get his $100. If his team wins, I lose my $100, and he gets my $100, and he basically doubles his money. It's the same with margin trading. I'm betting that the price is going to go a certain way, and I get paid by the people who are betting against me. Now, if you get good at this, you can long and short at the same time. This is actually my third long position of the day. I'm up right now on the day well over like $1,500 by, again, leverage trading. And I am... And this is just a typical day of scalping, essentially, for me. And I've made videos about this before, but I'm able to do this risking very, very small amounts of money and leveraging them up, okay? So let me explain what exactly leverage is, okay? First, we need to understand what is the difference between leverage and margin, okay? Leverage and margin. So let me open up a text document right here, and we're going to be talking about leverage and margin. Okay, now margin is the money that you are putting up for collateral. Again, in the illustration of our betting on the sports game, if we're both putting $100 on the bet, that would be considered our margin, right? We're putting that money up as collateral, essentially, so that if the bet goes against us, we have the money to pay the other people, right? I'm putting up my $100 in the sports bet so that if my friend wins the bet, he can get paid, right? So essentially, if I enter a trade, the margin is the money that I am putting up to risk in order to pay the other side if the trade goes against me. Now, what leverage does is it multiplies your margin so that you can trade with more money than you actually have. It would be like this. If I was betting my friend on the sports game, on Sports Ball Advance, right? This awesome new sports game that all us people are into, right? And I said, you know what? I have $100, but I want to bet more than $100. And so my friend gives me a 10x loan. He says, Jason, you have $100. I'm going to loan you $1,000, 10 times your initial capital, so that you can bet on this game with more money than you actually have. So that if you win the game, if you win the bet, instead of doubling your $100, now you're actually going to 10x those gains. So instead of getting $200, you're now getting $2,000. So we can think of margin, okay, the way we are going to margin times leverage equals how much money we can bet with. Right? That's the easiest way to think about this. And so if I have $100 and I'm trading with, if I have $100 in my trading account and I'm trading with 10x leverage and I'm putting 100% of my account onto the trade, I can now trade with $1,000. Okay? If I have $1,000 in my trading account and I'm using 10x leverage and I put 100% of my account onto the trade, right? I am now able to trade with $10,000. Okay? Now, why can this be advantageous? This can be advantageous to us because what leverage can do is, actually, before I get into that, let's talk about how this works now. So if I have $100, okay, and I'm using 10x leverage, so times 10, that equals $1,000. And so now if the price of Bitcoin goes up 1%, I am now making 1% on $1,000 instead of 1% on $100. Okay, so instead of making $1, I'm making $10. Right? Now, if I'm using 100x leverage, if the price of Bitcoin goes up 1%, I'm now making 1% on on $10,000 instead of $100, which means if the price of Bitcoin goes up 1%, I make $100 instead of making $1. Okay. Now the same works in reverse. Okay. Let's say I'm using 10x leverage. That gives me $1,000, and the price of Bitcoin goes down 1%. That means I now lose 1% of $1,000 instead of 1% of $100, which means I've actually lost 10% of my account because 1% of 1,000 is 10. And so I just lost 10% of my whole account. If I'm using 100x leverage and Bitcoin goes down 1%, okay, that means I've just lost all of my money and the price only went down 1%. So although it can increase the gains, you can see it can also increase the losses. And this is why people say you can get liquidated. But this is if we use leverage to gamble that we're going to lose money. But if, again, we understand the key levels, right, that we're looking to long, right? For example, the trade right here, okay? Even if I had, and I did not, even if I had used 100x leverage, the price went down only 0.33% from my entry. Okay, I literally did enter, I'm not even joking, from the exact level. Okay, let's see if I can show the screenshot of my entry right here. Boom. From the exact level that I was looking to long, right? You can't get better than this. Even though I had been using 100x leverage, I still had enough playing room to avoid getting liquidated because price did not go against me 1%. Now, I never recommend using 100x leverage, but what I'm saying is, if we have our entries on point, then we can have playing room. Even if I'm using 50x leverage, price would have to come down 2%. That's a big amount, all right? Price would have to come down all the way to here before I get liquidated. Now, why is this so, why am I talking about this? It's because if you know your analysis and you know what levels you're looking to take a trade, this is enough playing room for me to know I'm wrong. If I'm looking for a bounce from this exact level and we come down 2%, I know I'm wrong and I need to get out of the trade, and it's time to look for the next trade, right? So that's first. Now let's talk about the wrong way to use leverage. The wrong way to use leverage is to enter into a trade, right? And basically, to enter into a trade and just put 100% of your account on with higher leverage, right? That is absolutely the wrong way to use leverage. The right way to use leverage is to risk a very small amount of your money and then leverage it up so that you're as if you have a lot of money. Now, let me show you what I mean by that, okay? There's two types of leverage, cross and isolated. I prefer isolated because what this allows you to do is isolate a very small amount of money and put that on the trade. Let's say you have, and I'll just use my real account as an example here, okay? Let's say that we have $25,000 in our account, which I do here, and I just emptied it because every month I take my profits out and start over so I don't blow more money than I'm supposed to, right? So let's say I keep about 25 grand in each one of my trading accounts. That's the way I like to do it. But let's say that we have $25,000 in our trading account, right? We can risk 1% of that capital and use leverage to leverage it up. Okay, so we're not risking 100% of our capital, but let me show you what I mean here. Okay, when you are in an exchange, these buttons, okay, these buttons right here, they are basically telling us what percentage of your actual money you want to put up as collateral, right? If we're betting on the price going down, do I want to bet 10% of my $25,000, 25% of my $25,000? Do I want to put half of my $25,000 onto the trade? Okay. These numbers are telling you how much of your actual money is at risk for liquidation if you enter a trade. And this is independent from leverage. Let me show you what I mean. If I'm using 100x leverage, okay, and I want to put 25% of my account onto the trade, okay, notice that the cost is $5,000. This is how much of my actual money I'm putting on the trade because 25% of $25,000 is about 5.8K. But the value of my actual trade is $500,000 because I'm using 100x leverage. Now, notice I'm only putting 25% of my actual account onto the trade, which is that 5.8K, right? If I get liquidated, I'm not losing everything. I'm only losing a quarter of my account, which I never recommend doing. I'm just using this as an illustration. If we leverage this down to, let's say 10x, okay? And we put 25% onto the trade. It's a little bit different because when we were at 100x, it was 22. So hang on, let me try this again here. 25, that was 22.7 Bitcoin. So we'll put it down to 10x. 25% should be 2.27 Bitcoin. 2.27 Bitcoin. Now notice this. The cost, the amount of money that I'm putting on the trade is literally the same, right? $5-something thousand. I'm still risking $5-something thousand, but instead of able to put $500,000 on a trade, I'm only trading with $50,000. The point is, regardless of the leverage that I'm using, the amount of actual money that I'm risking stays the same. The only difference is how much the price has to go against me for me to get liquidated. For example, if I were to long here with 10x leverage, the price could go down over $2,000 before I get liquidated. But if I'm going to long with 100x leverage, okay, put 25% onto the trade, we can see that the price only has to go down literally, a couple $100, okay, $200 before my trade gets liquidated. So I'm still risking that same $5-something thousand, but it just is easier for me to lose that money the higher the leverage goes. Now, again, why is this so advantageous? It's so advantageous because if I have, let's say, $1,000 in a trading account, okay, I could use 50x leverage, okay, and put 2%. If I have $1,000 in an account, I could put 2%, $20 on a trade, at 50x leverage, and it's as if I have my whole account on the trade, right? I can use 50x leverage, put 2% of my $1,000. That means I'm literally, as my margin, only risking $20, but I'm trading with $1,000. Or if I'm using 25x leverage, right? I could put 4% of my account on the trade, and that's $40 on the trade, but I'm able to trade with $1,000. What I'm doing is I'm isolating a very small amount of money and leveraging it up so that I'm able to trade with a large amount of money. Now, you might ask yourself, Jason, what are the advantages of using leverage when I could just put $1,000 onto a trade with 1x leverage? And that's a great question. And for me, guys, a lot of it's psychological. Okay? For me, it's psychological because I actually use my liquidation price to get me out of bad trades. For example, I'm long from right here. Right? I'm long from right here. If I put, let's say, this is as if I had 2x leverage, 100% of my account on the trade, right? I have $25,000 in the account. I have a $50,000 trade open right now, right? It's as if I was using 2x leverage, 100% of my account. But instead, I'm using a very, very small amount of my account, and I have about 5% of this trading account on the trade, even though, guys, I have multiple trading accounts, so I'm not really risking 5% of my total trading capital here. That's a whole nother story. For more info on risk management and things like that, we go over that in the course, but this is specifically talking about leverage here. Basically, what I'm able to do is it keeps me from playing that game, guys. It keeps me from playing that game where if I'm long from here, okay, let's say price starts to go against me. Let's say it starts to go against me, right? What I tend to do is I tend to play that game of keeping the trade open, even though it's going against me, okay? And then I might even add to the position, and it'll keep going against me. Instead, what this does is I am long from a very, very specific place. This keeps me using good risk management, right? The worst that can happen to me right now is that I lose $1,000. Now, yeah, that's a lot of money. I'm not going to lose $1,000 because of my stop loss, but that's literally the worst that can happen. If I was using lower leverage, the worst that could happen is I could just take a massive loss. But we have to understand, I'm long because I was longing this region right here between the golden pocket and the 786. Right? I'm looking to take a long from this box. If price goes below this box, it means my idea for the trade is wrong and I need to get out of the trade. Right? That's what that means. And so what the high leverage does is it basically puts a safeguard on me so that I don't do something stupid and risk more money than I should, right? What it does is it allows me to take $1,000 and basically put $50,000 on the trade and trade $50,000 without actually putting all my margin up as collateral. Instead, I'm isolating a very small amount, 1,000, and I'm able to trade with 50,000 and make profits on 50,000. And in a worst case scenario, I lose $1,000. And I'm not sure what percent that is of this account right here, but typically I do not let myself get liquidated. Right? It's very, very rare that I actually let myself get liquidated. I have to have a lot of conviction in that position that I am taking. Right? But in general, I know now that the lowest I will let price go is down to this low right here. But in general, probably this low is the safe low, and I've already taken some profits. So if this trade does get stopped out, I'm losing $40 on the stop loss down here. But so I'm still up like 250 on the trade, still a good profit. But I just want to point out a few things. Okay, number one, leverage is not gambling if we do it responsibly and if we understand technical analysis. Okay. Number two, leverage is a tool that you can use to capitalize on smaller movements in the market and make big ROIs on very small amounts of margin, right? We don't want to risk a lot of money, so we're leveraging it up. Okay. And number three, if we understand technical analysis, and if we know, for example, that we're looking to long from this level, or if we know, for example, that we're looking to take a short from this level, right? I took a short from this level as well, right? We go to youtube.com. Um, let's check out. It was a trade I took on Sunday. Let's see, where was that? Right here. This is me trading and lifting weights because that's how I roll, guys. I love to trade in the gym. I'm in the gym right now, but this is me talking about how I long and short at the same time. And I just want to show you that I actually took the trade, guys, because I'm not trying to blow smoke up anyone's patootie here. I'm trying to show you what I actually do. That's why I'm in here showing you my positions, showing you the nitty gritty, what I do on a daily basis here. Right? I'm not just talking about the charts. I'm actually showing you guys what I do. So you can see I literally shorted from that wick right here. And you can see I often take trades. I took a long trade from this wick, short trade from this wick. I'm often taking trades, guys, from these key levels because I understand technical analysis, right? And that's what it's all about. It's about understanding technical analysis. If you are just basing your trades on, let's say, oscillators only, like market cipher only, you need to be very careful. You cannot use high leverage, right? And here's something else. Leverage is something where you need to find a sweet spot, okay? You can use 5x, 10x leverage very, very safely. Of course, not financial advice. This is paper trading only. I'm not a financial advisor, right? I'm just a guy who trades and drives. And of course, this is not a very healthy practice. It's not very healthy, right? But I'm talking about paper trading only here, guys. Paper trading only, right? I don't want anyone to get liquidated. This is paper trading only, right? That's how we stay healthy, is by paper trading. But there's a balance that we can have here when it comes to leverage. The balance is how much money am I willing to risk according to good risk management? What is my risk reward ratio on the trade? Okay, for example, if I know that I am longing here and that my invalidation for the trade is literally here, and I know that to be safe, I need that 1/3% of playing room, right? There's a balance, okay? And this gets into risk management and stuff we go over in the course. But there's a balance of understanding what position size to use, what leverage to use, so that you don't get liquidated. Right. The goal is to use leverage so that it's high enough so that you can put a lot of money on the trade without risking a lot of money, but low enough so that your stop loss, right, the invalidation or liquidation, is far enough away from you so that you don't have to risk getting liquidated. So a 50x leverage long from here, really, right? This means I won't get liquidated unless price comes all the way down to here. Okay, now let's be real. If I am taking this scalp trade, okay, I'm going to close it out way before price comes down to here. Okay, because I'm looking to long a very specific level, right? And so these are all things that we need to take into consideration. But the main point that I want to drive home from this is that leverage is not a tool used to gamble away your whole account. It's a tool that is meant to be used to take a very small amount of your capital and leverage it up so that you can make good gains on small moves using good risk management. And if you know what you're doing, you're not going to get liquidated. In fact, it can even be a tool to help you in your risk management. Now, that being said, I do not recommend anybody trade with high leverage unless you really know what you're doing. I do not recommend anybody even trade at all because trading is risky, guys. And I have lost a lot of money. It took me a very long time, lots of losses and pain and suffering and being in the trenches before I got to a place where I felt like I could actually consistently grow my account and be profitable. It's not for the faint of heart, guys. It's really not. But I don't like hearing so many people demonize leverage because it's a tool that can be used. It's something that has changed my life. It can help people if you don't have a lot of capital, but you actually are good at trading. It can help you make gains in a responsible way. And so that's all I really wanted to say, guys. I hope you found the video helpful. If you did, make sure to like the video. Make sure to subscribe to the channel. Again, don't sign up for ByBit, guys. Don't sign up for PHEMEX. Don't sign up for Bitget because you will definitely lose all your money trading. God bless everyone in the name of Jesus, and I will see you all in the next video. Peace.